Have you thought about selling your primary home but are unsure of the tax consequences? Or maybe you're just unsure on what's the minimum amount of time needed to avoid paying more in taxes. Either way, today we'll break it down. Hey there, tax warriors. Welcome to JDB Tax. I'm Brian Eustache, enrolled agent and tax strategist. But I call myself a taxtician, a tax tactician leveraging the tax code to build your financial fortress. And with this segment of Tax Tactics, we're tackling a topic that hits close to home: capital gains on the sale of a main home. Let's dive straight into the tax code. Under a Section 121 exclusion from the IRS code, if you've lived in or owned your main residence for at least 2 out of the last 5 years, you can exclude a hefty chunk of the gain from your income when you sell. That's right, tax warriors. You can avoid capital gains on up to $250,000 as a single filer or a massive $500,000 as a married couple filing jointly. But I'm not going to end the video there. I know you want some more details. So here's what you need to know. First is the main home criteria. It's not just houses. Your main home can be a condo, a co-op, a houseboat, or even a mobile home. If you use only part of your property as your main home, these rules apply just to that part. Now, there are ownership and use tests as well. You need to own and use the place as your main home for 2 years within the 5-year period ending on the sales date. Guess what? Those 2 years don't even need to be consecutive. And it doesn't have to begin or end on the date of sale or purchase. So as long as it was 730 days somewhere in that window, you are all good. Also, if you'd like to see more tax content like this, hit the like and comment down below. Now, every good rule has some exceptions, like if you're serving in the military, Peace Corps, or intelligence community, you might get to suspend the 5-year test for up to 10 additional years. Or maybe you can't stay in your home due to health reasons or other unforeseen circumstances like unexpected changes in employment. There may be exceptions to let you still claim a reduced exclusion. And if you sell the home within 2 years of a deceased spouse and you haven't remarried, you can count the time your spouse owned and resided there as time for your calculations. Now, you gotta avoid these traps. If you acquired your home through a like-kind exchange, you've gotta wait 5 years to claim this exclusion. And if part of your home was used as a rental or for business, make sure you're not caught off guard by depreciation recapture, which could affect your gain exclusion. Also, make sure it's been at least 2 years since you or a spouse excluded gain before. Remember, if you haven't used your property as your main home continuously, you'll need to allocate gains to non-qualified use periods as well, which might not qualify for the exclusion. But don't worry. Anytime after the last date you use the property as your main home leading up to the sale, that isn't counted as non-qualified. Case in point, I'll give an example. Let's take John, who bought his house for $250,000. He rented it out, claimed some depreciation, and eventually lived in it before selling it for $450,000. I'll break down what he can exclude and what gets taxed so you can see exactly how it works. You can pause to take a closer look, but 20% of the gain doesn't count for the exclusion. And whatever he took from depreciation will lower his cost basis to lower than $250,000. And that depreciation isn't available to be excluded as well. So when you add business use or any non-qualified use periods, it gets a little more involved. If you think you have a situation that's more complicated, ask a professional for help. You can even use other tax strategies to help offset capital gains. Tax planning can help you be ahead of taxes. That's how JDB Tax Strategy helps business owners legally save money on taxes without fear of the IRS by leveraging the tax code to the fullest extent. After booking a consultation call with us at jdbtax.com, We'll build a personalized battle plan to minimize your tax burden and maximize your wealth. So, subscribe, hit that notification bell, click all to join me on this epic quest to conquer taxes and claim your financial throne. Post tax tactics every Tuesday and Thursday. See you next time, tax warriors.